Hey everybody, Rob Booker here. This video is sponsored by IGUS. Want to thank them, their leading Forex broker, for sponsoring this video and for being all around great people to me all the time. So it's February 3rd right now, and we've got a big week coming up. Some weeks we have just stacked with interest rate decisions and all kinds of other reports, but this week we just have two really major economic reports going on. But then we have like a giant technical level that's going to be reached. And so I think it's going to be a really fascinating week to see how things play out. So the first big thing that we want to look at this week is the Australian interest rate decision, the cash rate, which is right now at 0.75. That's not going to change. There's almost no scenario under which that changes unless the Reserve Bank of Australia gets worried about the Chinese virus spreading around the world or something like that, and then I don't think anybody's ever lowered a central bank interest rate because of a virus. So that's really unlikely. Given the interest rate decision, let's take a look at the Australian dollar, which is at a critical level and a really interesting situation. So if you go back to August of 2019, and then you go to October of 2019, and then you go to right now, 2020, we have now made a quadruple bottom from August and September, from October, and from right now at, let's just call this 67 even. We're right there on the cusp. Now, we could bounce here, and I wouldn't fault anybody for giving that a try. I wouldn't do it myself, but I wouldn't fault anybody for giving that a try to that bounce with a stop loss under 66.50, because there are going to be a lot of stop losses at 66.50. Below that level, if we break that level, if there's a bearish interest rate decision, if there's language that suggests that we stand ready to lower interest rates, or given the nature of current financial markets and the economic outlook around the world and blah, 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 if there's any kind of bearish language in that interest rate decision and we break 66.50, this is what happens. The bulls begin to stop out. And to stop out of a buy trade, you sell. So there's selling pressure from the bulls stopping out. And then what happens is market makers have to keep lowering the price to encourage buyers to come into the market. Imagine if something becomes less valuable in the eyes of investors. What do you have to do in order to sell it? You have to keep lowering the price. And so from 66.50, it's not a stretch to see 6,600. We break 66 even. That's going to, I think most market participants would expect 65, 64 and lower, and that's a significant long-term bear market coming in the Australian dollar. I think this is going to be the most important interest rate decision coming out of Australia all year long. Okay, now, what if we do get a bounce? What if we do get a bounce right here? I'm not opposed to personally taking a buy trade here on a bounce. So we drop, that's an impulse trend, then we corrected, that's a corrective, and then we impulsed lower on a longer wave. It wouldn't surprise me to see us get up to 68. That wouldn't surprise me. That wouldn't shock me. And then continue lower. I think that's where if you're a bear, that's where the great sell trade comes in. 67.75, 6,800. If we break 68 and above, then this whole corrective nonsense is gone. And from 68, we probably go to 69 and even 7,000 and above, and the Australian dollar gets a recovery. But in order to do that, we're going to have to get a pretty bullish decision out of the Australian Reserve Bank. Okay, so that's the look at Australia. Let's move on to the dollar yen, because with the non-farm payroll report coming up on Friday, everybody's going to be watching to see if job growth has stalled in the United States. And here's the US dollar Japanese yen. So let's grab this picture here, and let's just get a really good look here at the dollar yen, because this is the one that's going to be the most sensitive to the non-farm payroll report. Here we are at 108.65, okay? And if you look at this, we haven't done anything. We have been going sideways since November. I would say since November of 19, we've been going sideways. This is a meaningless amount of movement. And what it looks like is happening, technically speaking, is we're rolling over here. The technicals seem to suggest that there's a weak non-farm payroll report, worse than expected, coming through. And you'll know that the bears are in control if we can break below. I mean, let's just give it like 107.20. A quick trade down to 107 is easy, and I think then we see 106, and then we see 105, and then that's going to put, if we break 105, then we're putting 104 in view. That's the low from September of last year, 2019. I'm not a bull until we break above 110, and the likelihood of that happening, it's just hard for me to imagine a scenario with the virus and with the, with as much stress on the world financial system as there is right now. That's hard for me to imagine, but if we break 110, the bulls are in control, and then we're probably going to go back and see 112 and the highs that we made. I mean, you have to go back all the way to early 2019 to get some of those highs in place. So once again, thanks to our sponsor, IGUS, leading Forex broker. Are we supposed to say IGUS? Yeah, that's what we're supposed to say. Link below to them, open an account. You can get started trading some of this stuff today. All trading involves a substantial risk of loss and is not suitable for all traders. If you liked the video, leave a thumbs up, and if you loved it, subscribe to the channel. We've got a lot of great stuff coming for you this week. I'm Rob Booker. I'll see you soon.